In 2012, to build a product, you had to know code, raise money, hire engineers, burn months, sometimes years, just to launch your MVP. Back then, if you didn't raise the seed round, you didn't even stand a chance. But today, it's different. One founder, zero funding rounds, one weekend, and a product goes live. Startups have changed forever, and the way to build the startups is easier than ever. Now, let me take you back to 2010 2015 era. If you had an idea, great. Now you would need to spend at least 50 lakhs to 1 crore rupees just to build it. Why? Because back then everything was manual. Code was hard, design was expensive, you needed full stack devs just to build out the product, project managers, and maybe even a CTO or a tech co founder. If you weren't technical, you were essentially screwed because you could not rely on third party agencies. Because third party agencies were not only expensive, they did not have the best interest of the startup founder in mind. But if you did not raise money, you were essentially done. But in 2025, you can build your MVP with zero engineers, zero designers, zero investors, just with the help of AI. And all you need is a problem worth solving. Back in the 2010s, it wasn't just about how good your idea was, it was about how much access to capital you had, how much funding you had. Because if you did not have funding, there was practically no way to build your startup to begin with. Founders would spend 10 lakh rupees to 50 lakh rupees just to build a working prototype. You would require 6 months just to build basic wireframes and the front end design. And all that just to test if people even wanted the product to begin with, just to build your basic MVP and get the basic proof of concept along the way. Most of the capital went into actual building the product, not validating it. So before you knew it, 20% was gone to your tech co-founder or the developers whom you hired just to build the product. 15% gone to early investors, and another 10% to the development agency who was building the product with the help of the guidance of the CTO. And guess what? You haven't even launched the business yet. So the question is, now what? What's happening in 2025, and why is 2025 different from the days back in 2010? Now founders are building MVPs over a weekend. You can get real products, real users, real traction. You don't need to hire full stack devs. You don't need complex tech partners. You don't need complex CTOs. All you need is tools like ChatGPT or GPT-4 for ideation, UX writing, and to get customer insights. You need Framer and Webflow to build entire landing pages visually, and you have landing page builders like ClickFunnels, Lead Pages, and many other players out there to create an actual tangible landing page. You have Make.com or Zapier for automating the backend logic. You have Claude and Perplexity for research and brainstorming. So you can get all of this for under 50,000 rupees paid subscription. No engineers, no code. Now any founder from tier 2 or 3 cities in India can build their startup easily. Now imagine if you want to help build a B2B SaaS product to help factory owners track downtime. Earlier, you'd need 25 lakh rupees just to hire a dev team to cover their 2 to 3 months salary. Instead, now you can build an MVP using ChatGPT and other AI tools. You can get 5 factories to pay you and then raise your pre-series A at about 100 CR valuation so that you can then hire sales and marketing teams to grow even further. And the best part is you still own 80% of your company because you skipped the pre seed and the seed round entirely. Now, this is the major game changer. Today, you don't need to give up 30% equity just to build the product basics right now. You don't need that at all. You can get those MVPs built very easily with the tools available. You don't need 3CR in funding just to test an idea. All you need is a clear problem, you need AI tools, and relentless execution. Anytime when a founder asks me that he wants to raise pre seed funding, just the money to build the product, this is the exact message I share to them, that you don't need funding, you don't need to dilute your equity at all anymore. So the question is, what does that mean? This means you keep 70 to 80% of your company by the time you reach Series A. It means you raise when you actually want to scale to higher levels, but not when you're desperate to start. Awesome founders today are raising Series A as their first, or at best their second round. AI first startups equal to equity first startups. This isn't just a technology shift, this is a founder power shift. AI first startups are lean, they are fast, they can build very easily, they implement very easily, and they can get traction very easily. And most importantly, they are deadly efficient. They don't wait months just to build vaporware which no one wants. They launch, they validate, and they monetize before writing a single line of code. They are not burning money, they are printing momentum. And here's the twist, in a world in 2025 where access to capital is scarce, I don't mean that there's shortage of money, but the chances of getting the VC trust has become significantly higher. And in such situations, speed matters far more than fundraising. Validation beats valuation. It's not about raising 100 CR or 500 CR or 1000 CR. The real flex today, it's about building a 100 CR company and still owning most of it yourself. The new generation of founders, they are not chasing investors, they are chasing customers, they are chasing buyers who are willing to pay for their product, who are willing to pay for their services. They are not hiring 20 engineers, they are hiring just one or two at most and still shipping product every week. They are not diluting their dream, they are protecting it. Because now AI gives them the power to build with clarity, with speed, with leverage, and with control. So, if you've been sitting on an idea, hoping for a developer or a tech co founder to help build the idea for you, or you're waiting that some miraculous VC would just rain down funding upon you, stop waiting, start building. Build small, build smart, build efficient, and keep your company and your equity with you till you reach Series A and B stages. Because this is your moment. Welcome to the era of high equity founders in the age of AI generated startups, because this AI startup revolution will help you retain your equity, and all you need to do is get paying customers for your business. That's it. So if you need help to build such a lean and mean startup, check out a free training link in the description below. Building with AI and bootstrapping your MVP. That is extremely important. Now tell us in the comments, what did you think about this video? Would love to hear your story, and